I'm Nancy Wittenberg. I'm a commercial realtor who specializes in multifamily, making money, and motherhood. I'm here today with Mitch. Please introduce yourself.
Hey Nancy, I'm Mitch Roye. I'm an investor here in Phoenix, Arizona, and I buy residential cash flow properties.
Okay, so explain how that works. What do you do?
Cash flow essentially is buying an undervalued asset that consistently generates a monthly income regardless of market value and fluctuation, and we hold it for the long term. It's very similar to what Warren Buffett does. As you know, he buys undervalued companies that generate cash, and he holds them for the long term. So what we're doing here in Phoenix, and we have a unique opportunity, is we're buying undervalued bank-owned homes such as REOs and short sales that generate monthly cash flow, and we turn them into cash-generating assets that we hold for the long term. I like to call it rentals on steroids.
Yeah, that's excellent. For single-family homes, definitely. All right, so explain to us what type of investing this is.
So what we're doing, again, we're buying undervalued bank-owned homes, and we resell those to people that want to be homeowners but cannot get a bank mortgage for a whole host of reasons. And we structure the transaction that lets them buy the house at a later date and a higher price while the house is providing a cash flow income to us.
So what kind of houses are you buying?
We're buying houses in Phoenix, Arizona, primarily on the west side. We're buying basic middle-class starter homes, 3-bed, 2-bath, 1,400 square feet, in good, solid, and safe neighborhoods.
Okay, so how could this be considered a win-win from both sides, both the tenants or the person who's buying the property and for you and your investors?
Well, obviously, it's a win for the buyer because we're providing them with a path to home ownership whereby there was none before. Not to mention, every month they're building equity credits off the purchase price of the property. So we're taking people who could have been renters and making them homeowners again. So that's a big win for them. For our side, my partners and I, this is also a big win because this is a very conservative strategy. And we like to take a cautious and a conservative approach to our investing, and that we like to make money, not lose money. What's more important, what we found is this type of investing offers us a number of criteria such as safety, security, cash flow, long-term appreciation, and a high rate of return. That's at a global level. Now, on a particular house like this, what's really attractive for us is when we put a buyer into one of these houses, on each house, they're going to pay us a non-refundable fee to buy the house at a fixed price at a later date. They take care of all the maintenance in the house, so we don't have to worry about that. They're signing a long-term contract to buy the house at a premium multiple of what we paid for the house. And last, and probably most importantly, they're paying us every month so the house is generating a cash flow income.
So you've got cash flow and you already sort of know what sort of appreciation you're going to get because you're locked into the rate.
Yeah, and what's important is we're not buying for appreciation. We know that over time these houses will appreciate and the market already is appreciating. We're buying for cash flow today. We will not get into a deal unless it is already going to make us income from day one. Actual appreciation down the road is really a bonus for us.
All right, I like that win-win strategy. Okay, so what if the house loses value? What if in 5, 10 years when they're going to pay for it, it's actually lost value? What do you do then?
You know, and that's a question I get a lot. What if you buy a house and it loses value? And that's a good question. Right now in the Phoenix, Arizona market, over about the last 9 months, what we've seen is just the opposite. We have seen property values starting to increase. And what we're seeing is when a new bank-owned property comes onto the market, the MLS, it is not uncommon to see multiple offers on that property, full cash offers at full price or higher, with a quick close. And you couple that with the fact that there's less and less inventory today than there was a year ago, that is making getting these houses even more competitive. That has led us to believe that we have hit the market bottom in terms of pricing sometime about last spring. But the important thing to remember, and I said this, is we're not buying based on market value or fluctuation today. We're buying for cash flow. In the unlikely event that the market reversed itself and started to decline, I'm not too worried about that because we have people in our houses on long-term contracts that are paying us a monthly income. So we're covered.
So you are protected.
We're protected like that.
All right. Okay, so let's talk numbers. We are in one of your homes. So tell us some numbers around here, please.
This is a typical home, a middle-class home on the west side of Phoenix. This home is 3 bedrooms, 2 baths, about 1,300 square feet, in a good, solid, middle-class neighborhood. We bought this house for cash. It was a short sale, and it needed very light to moderate rehab, which is typically what we like to do. paint, carpet drapes, we did some landscape on the property. Our total investment on this property was about $65,000. We currently have it on the market right now for $950 a month, plus a $3,000 non-refundable deposit, and the buyer can purchase this house over a period of time, either 10 or 20 or 30 years, for $130,000. So you can see how that would make sense for them, but you can see where our acquisition is 65, we're selling it for 130, so we're nearly doubling our money, plus all the annual cash flow. So that's important. And as of this morning, we've already taken 3 applications on this property, and I do expect we'll have this one sold by the end of the week.
Wow, that's pretty quick. That's fantastic.
These things go very quick.
Okay, so how does somebody get started? What is the first step that they need to take in order to get moving?
You know, a lot of people are interested in doing this, but
Sure.
either they don't have the team or the experience or the knowledge, or they're not local to the particular market, and that's fine. We do work with a limited number of partners as part of our joint venture program, and if people are interested in learning more about what we do, I would strongly encourage them to call you directly or to call me. The thing to remember though, this is not the type of investing strategy for everyone. For people who are interested in a short-term return or investment, or very risky or speculative investments, or they're hoping to make a boatload of money overnight, this is definitely not for them. For people like ourselves who are interested in safety, security, long-term appreciation, cash flow, preferential tax treatment, and a high rate of return, definitely something we want to investigate further.
All right. Well, thank you so much for your time, Mitch.
Thanks,
We appreciate
Nancy.
that, and thank you for watching this video.
Thank you.